One thing which differentiates HDFC Bank from all other banks as an investment in stocks is that is what you're going to see today in this video. So before I proceed, please click the subscriber button so that you know you will be getting lots of valuable informations on stock market, mutual funds, investments, and insurance and wealth creation. Hi, hello, this is Ganesh and your millionaire coach and author of the book Money Leaks. In today's video, I'll be sharing about what is that one thing which differentiates HDFC Bank from rest of the private banks and public sector. Is it a new thing I'm sharing? Yes. For people who wants to invest in stock market, the banking sector is something you can't miss investing, because that is one sector that needs to kickstart the economy. So only when it kickstarts the economy, the money flow will happen from banks. It will go to the all other areas of companies, infrastructure or retail, home financing, or take it anything, manufacturing, automobiles, or whatever the companies are there, pharma companies, everybody borrow money from banks, and then only it will go and the economic activity will get kick-started, right? So banks are common, right? This is what it looks, right? But once you go into the operational activities of each banks, there is a unique advantage what HDFC is having. If you look at there are two sectors, broad categories of, not sectors inside banking sector, there are two broad categories. One is public sector banks and private sector banks. Public sector is deeply undervalued, and the biggest problem is that the capital adequacy ratios, the capital required for the banks are not enough, and the bank government, which is undertaking all the public sector bank, they need to recapitalize. As that is not happening, and all the most of the loans are NPAs, non-performing assets, automatically the public sector banks become less preferred when it comes to investing. You should prefer less as of now. This is the condition, right? And when it comes to private banks, again, the private banks, how they make money, there is an interesting thing, like they get deposits from you guys, from retail people and institutional investors, and they give loans to institutions and publics and all these things. So broadly, because of the loans only, they are earning money. And what are the kind of loans you get? And mostly it is like car loan, home loan, business loan, and business loans can be categorized as corporate loans, and all these are related stuff, right? Okay, so the inside loans also, the retail segment was retail people like us will go and buy, you and me will go and buy a home loan, car loan, kind of mortgage loan, not more than that. And business people will go and get corporate category of loans, meaning they will be getting in crores and crores, and they'll be earning money. And for corporates, generally the profit margin is high, because they will be charged at 14% or 12% or whatever, and they will take a longer period of time, and the probability of business falling in corporate business falling is huge. As you all know, out of 100 business getting started, after 3 years only 80% survive, and after 5 years, if you see, only 5% survive. Remaining, either they will run the company, or they'll be going to shut down in a few months or years. That is the status. If that is the case, the corporate loans has to be monitored closely, and the probability of default is huge. And in this reason, HDFC chose a very unique category like retail loans. They'll be giving loans only to middle class people like you and me, and because we will buy loan and we'll close the loans as soon as possible. The best example is home finance. When it comes to home finance, we buy loans, we'll close it off, and deposits and all these things we'll be religiously doing, renewing, and we won't go beyond means in buying loans and closing it off. Though we take EMIs, but we will be repaying it, right? So that is a category which HDFC Bank is in, and this is the most important aspect: net interest margin. So for deposits, as of now, let's take the current example. The deposits at most of the banks is around 5 to 5.5%. Even in HDFC, that is the case. And loans is lended at 10 to 12%. That is the case. If you can negotiate, you will get better things, or else ideally 10 to 12%. So the difference between 5% and 10%. Deposits will be bought from you at 5%, and you will be getting loans at 10 to 12%. So think of what kind of business these banks are in. So the difference between these two, it will not be plain, because the operational expenses and everything will be taken care, and that this net interest margin will be displayed in all the ratios of money control or economic times. You can check. So as of now, these most of the private banks will be close to 4%, 3.7. As of now, the HDFC Bank is having 3.779%, and Kotak and all other banks are also having in this range. Close to 4% is the net interest margin between what they get as savings and what they give as loans. And why the returns are less? If the deposits what they get and the loans they are giving is huge, because certain loans will become non-performing asset. That also they need to consider. Operational expenses they need to consider. All these things will come into picture. So the biggest point is non-performing asset. What if the loan they are given become non-performing? What if the person they bought the loan is not able to repay? And just think of, as a middle class we had grown, right, from 2000 to 2020. In the last 20 years the middle class segment has grown, meaning the level of income has grown from here to here. It's visible because the kind of home purchases we did and the kind of income we got into and all these stuff. This signifies that the home loan segment is the home loan or deposits, are the deposits, the home loans and car loans, and everything is growing at a good pace. And the repayment is also not a problem. And the major advantage with HDFCs is they focus more on retails, and the corporate loans is very safer, only they will invest. And that is the reason the non-performing asset of HDFC Bank has been around 1 to 2%. So that is a huge advantage with respect to this bank. And even in the case of 2008 mortgage crisis, everybody feared that what will happen to HDFC, because that is the first time this company is coming into providing loans and all these stuff. So during this phase also, HDFC Bank recovered very quickly, and the non-performing asset at that time also, I think around not more than 4 even at that time. Right now it's around 1 because of the moratorium, EMI moratorium, loan moratorium given by Supreme Court. That categorization is that calculation is there. So as of now it's showing only last quarter result is it's showing around 1.3 something. So around 1, I think. So that is the case. So the NPAs are under control when compared to other private banks. The operating profit margin, that is huge, in the sense positive. When it comes to operating profit margin is positive in this case. And these are the scenarios which made HDFC Bank the HDFC in the last 25 years from the time of listing, almost like they are positive for all these years. Just think of, you are investing in the HDFC Bank for the last 10 years, your returns would have been like, probably your deposits would have doubled, or maybe doubled, in the sense 5 lakhs would have become 10 lakhs, maybe 12 lakhs. And if you have withdrawn some amount, that is also gone. But in the case of, if you are invested something in HDFC 5 years before, 5 lakhs, that would have been much more worthful, because the dividends what you get and the bonuses sometimes they will issue, and all these things get added in the HDFC Bank shares. And that is the reason you should hold HDFC as a company, and any other companies which has been separated and listed in stock market. That is also one of the gems. So it takes probably I will start sharing analysis about all other companies like HDFC Life, AMC, HDFC AMC, and HDFC Housing Finance, a separate company where they issue only housing finance loans. So housing finance. So these are the different categories about other listed companies which are also doing extremely good. They got recently launched in the last few years, but HDFC as a company, it's one of the huge market wealth creator. So if you are looking for investing in banks, just think of, in the March crisis, during the COVID March crisis, the stock had tumbled and came down to 850 along with other banks. But because of the quality of the assets and because of the last 2 quarter results, they were able to show profit growth among all other banks. That is the reason the stock has recovered. And from its lows, it's almost reached 30 to 40% profit in the last, from the time of its lows of around 850. So some people said they had written off the company because it will not be good, but the quality of the management, what the previous CEO has given to Shashidhar right now, it is intact. It looks it intact. So let's see what will happen. Though there are immediate hiccup of the technology issues which came up because of the power failures, all these things which RBI has pulled off the things. But the point is they are investing for the future. Any company, if they are investing for the future, that company you should stay invested. That, or else you should increase your stake, or you should look at investing in the coming months and years together. So this company should do good in the coming months and years as it did in the past few years. But this is not a stock recommendation. This is a review about how this HDFC stock should be analyzed. Certain good points which you can look at, and the probability of HDFC to grow, because the middle class is going to increase, the middle class is going to expand, increase their income. So along with that, this company will also grow. So as a investor, if you can allocate a portion in HDFC Bank, it will be a value addition to your portfolio. So once again, this is not a recommendation of the stock. This is just a review of the HDFC Bank, and I'm not a SEBI registered investment advisor as well. So I completed SEBI's NISM's exam, investment advisor. So thank you so much for watching till now. And if you had liked this video, if you had liked the analysis, please click the subscriber button and Post your comments if you have any other questions with respect to HDFC Bank. Thank you so much for watching. See you in yet another video. Thank you.